Hi, Sri.
Hi there, Mandy. Well, going into this extraordinary OPEC meeting today in Vienna, we've really seen the oil price move higher in anticipation of an impending OPEC cut. The big question is how much are they going to take off the market? And it appears that there's a range floating around. We don't have a consensus at the moment. That's proving to be quite elusive, but we are hearing that it could be anything in the region of 1 million barrels a day to 3 million barrels a day. Now, what's interesting here is that this meeting is really being flagged by a lot of commentators as the most difficult one that OPEC have been experiencing for many years now. There are a number of challenges here. There's a lot at stake, given the fact, and remember, this is unfolding at a time of great economic stress globally. OPEC have seen the price of their oil decimated, down some more than 50% from the all-time highs that we saw back in July of close to $150 a barrel. And that's the reason why they want to move, to take oil off the market, to prop up prices, and ideally support prices around $70 to $90 a barrel. But as I said, any output cut is going to be very unpopular amongst the consumers, because their mode of thinking is that a cut is going to cause potentially a spike in prices, and that's exactly what consumers do not need given this time of great economic stress. So this is going to be a very difficult meeting for OPEC. They're going to have to tread a very fine line. Back to you now, Mandy.
Thanks a lot for that, Sri. Well, let's bring in our guests now. We have Jonathan Kornefeld, who's Director Asia, Hudson Capital Energy. Just a second ago, Jonathan, we were talking about where oil should be, but where oil might go, regardless of what OPEC is going to do tonight. And you reckon oil should be around 70, but we may, of course, overshoot, mightn't we?
Sure. I think the marginal cost of the barrel right now is between $65 and $80, actually. But there's just so much volatility in the market. You're seeing in equities as well as all across the commodity sector that there's really investors, traders are not really looking at fundamentals right now. It's when can I get in and immediately when can I get it back out again? When can I try to make some money, and do I have to redeem some of my gains already? So while I think there's certainly a solid floor around $70, that doesn't mean that the market's not going to overshoot into the 50s and possibly even below the 50s. So there's an enormous amount of volatility, and even with this OPEC meeting coming up, the volatility is not subsiding, and whatever the result is coming from this meeting, you're still going to see the market bounce around for
whatever
quite a bit.
The result. Do you think it's all fully priced in, even if we do get a larger than expected output cut?
Well, that's the thing. You're seeing Venezuela would probably love to see something 2.5 to 3 million barrels per day. Saudi Arabia is probably more along the lines of 500,000 to 1 million. I think we're going to look something closer actually to 2 million barrels per day announced at this cut, probably to start in December. I think at the December meeting you'll probably see another 500,000 to 1 million barrels, possibly even after that. It's going to see how the market absorbs this. And I think anything less than 2 million, crude oil is going to shoot lower and probably even test the $60 level very shortly.
Jonathan, arguably, even if we do see 2 million barrels a day taken off the market, is the price impact going to be overshadowed by the deteriorating economic conditions? That seems to be the overarching issue at the moment for the oil market, and the bearish momentum is very strong.
Right, the bearish momentum is so strong. I saw a commentator actually on CNBC earlier in the week. He said that we're creating a bubble in bearishness, and I completely agree with that. It's just the panic is really just pushing this market lower, but to a sense, it's almost you can almost agree with it, because nobody really knows how bad this is going to be in the U.S. or Europe, and particularly Asia. How is this really going to impact China, which is where we really need the increase to come in terms of a demand for energy in order for oil price to eventually turn back around. Whether it's going to turn around in 2010 or 2012 really depends on what happens in the next couple months.
Yeah, that was Daniel Frischberg at laughandfrischberg.com who said it's a bubble embarrassment. Sorry, Sri, come in here again.
Sure, Mandy. Thanks. We've seen a bit of oil diplomacy going on in the run-up to this meeting as well, Jonathan, haven't we, with the Secretary General of OPEC flying to Moscow to press the case on the Russians to join in with this production cut. What's the likelihood of that happening, that non-OPEC are going to share the burden?
I think non-OPEC actually came out earlier in the week or last week and said that they do not want to cut it. You're not going to see, I would be very surprised to see Russia or Norway cut. Venezuela, as much as they scream for a 2-3 million barrel per day cut, they're not going to cut, because they need whatever petrodollars they can get right now, because their economies are certainly in trouble right now. So everyone, they come off with these hawkish statements, but they just expect Saudi Arabia to pick up the slack. So I still do not think anyone in the non-OPEC nations is really going to do anything right now other than come out with some sharp rhetoric.
Here's a question that a lot of people ask, and why is it that product prices haven't come down nearly as fast as crude prices? I mean, crude prices have more than halved, right? But if you go to the pump, if you drive a car and you go to the pump,
Sure.
Nothing has come down by half.
I know. The gasoline price has certainly come down, and it almost seems like from a consumer point of view that they are very quick to raise the prices. You see your local gasoline station raise the price on hurricane warning, but once that hurricane comes, it's not as bad as it was. Very slow to lower the prices back down. I think that's also a bit of human nature in terms of that as well. But if you look at the stockpiles and inventories in terms of products, they're still very low. So there's still a bit of a good reason why these prices are still up there a little bit, despite demand coming off.
Thank you very much for joining us today. Jonathan Cornfield, Director Asia, Hudson Capital Energy, joining us here in Singapore. Well, let's move on now because we're going to go out to Shanghai for a market update right after this break. Do stick around for details.